Hey everybody, Cowboy here. Today we have a conversation about some of the pitfalls of backtesting and how to use the review tool in TradingView as far as avoiding those pitfalls. And if you stick around after this quick clip, you'll see how to find us and what we do, or you can go to the website at the bottom of the screen or zap the QR code. In the meantime, enjoy the show. Because here's the thing of backtesting and people screw up. Unless they're using the replay function, they see all this profit and they're like, oh, this is my great method, right? I'm going to get all this profit, so I'm going to get this, But here's the reality. If you were really trading this at the time, right? We'll use the replay function to illustrate this. And this is super important for people who are backtesting right now. This is like maybe the lesson of the day, okay? So we're going to use the replay function, which if you go to the Algo Factory videos, it has like an entire tutorial on the replay function, right? So I'm going to go candle by candle. Okay, so we go candle by candle, right? We get the breakout, we get the entry, right? Now, as I look back, I have this structure that's right here. And that's a pretty strong structure that I don't know that I want to try to take profit past that, because there's a good chance price is going to go there and then reject and come back down. There's a really good probability of that. So what I'm going to do is I'm going to maybe... I might take a look at a fib extension real quick just to get an idea of, where things are going. So let me just run that real quick. Okay, so my targets are way, way, way up. That's not going to worry about fib extension on that. I mean, I could do like a lower level one, but yeah, I'm not going to do that. So that structure is just blocking me off from taking advantage of like a fib extension or anything else. It really is. Now, I could have some potential targets up there, and I could just have a plan to maybe move, take off some profit at that structure, and then leave some on and move my stop to entry. That might be a way to go on that. So I could potentially have targets up here and up here, just, in case price does break that. And so we could run that game, but I would not be leaving any risk on after this. Right? Not after this structure. I wouldn't leave any risk on. So what does that look like from a trading standpoint? How would I plan that? I would have, okay, sure. I could have my take profit go all the way up here. Of course, this would extend out pretty far. But the plan would be, right, as it breaks out and price comes up to take my first take profit, which would be below this structure, I would take profit probably right about here. I'd front run that. As profit came off here, which is beautiful, it's a 1.8-ish to 1, I would move my stop to entry. I move my stop loss to the entry, right? Okay, so that's how that would go. But using candles and breaking out, right, kind of which started this conversation, is that, okay, first, we're not going to see the, we don't know what's going to happen, right? We're not going to see what happens. So the first entry might be right here with that deeper stop. Okay, so what's the next candle look like? Okay, now we have a higher high, higher low. I could say, okay, I'll put more money on, but there's no pullback for me to take advantage of. Like, this just means that my trade looks good, right? So now if I were a conservative trader, then my entry wouldn't be until like right here, maybe the next candle, right? So, next bar market, which would basically be like right there. And if that's the case, now I'm sitting at about a 1-to-1. For my first target, which is meh, it's acceptable, right? So my first target, which is the one that matters, it's like right at 0.96, and I haven't calculated a stop. I mean, it might be if I calculated the stop, it would look better. It might be if I'm doing like a 1.5 risk reward stop, which we've talked about before, from entry, that might be a lot tighter. Maybe I look at the stop based on this, little wick up. It's not what I normally would do, but some people do that. In this case, though, this trade might not be takeable because it's like not a 1-to-1. I mean, let's just say I was front running a little more strictly, then yeah, it would be a 1-to-1. I mean, it all depends on how you do things, right? But you have to do it the same way every time. You can't just say, oh, well, I'm going to move this up a little bit because, I'm going to be a little less strict on this just so I can have a 1-to-1. That's not how it works. You have to set your target the same way you would every time. And if the trade doesn't meet your metrics, then you are not going to take it. That's how that goes, right? So in this case, With this second entry right here, I couldn't take this trade because it's not a one-to-one. It's how I would take profit normally, and it's not a one-to-one, okay? And my rules on taking profit based on structure have to do with the candle formations up here. So the thing is that you have this strong rejection right there and these two candles, and I would take it before this candle body. So to be super, super strict, it would look like before the top of these two candle bodies, and that's not going to be a one-to-one. It's going to be very close. 0.96. Yeah, so anyway, out of that trade, but maybe you do things differently, whatever, right? So let's say this trade actually worked for you. Let's say you were in this trade. Maybe you're taking it right to structure. I don't know. Just pretend your rules say that that's your deal. You're at a one-to-one. Okay, so back to the scenario. What would happen is as you took profit off, like right, say here. Okay, so let's move forward to that. Okay, you took some profit off. Stop goes to entry. Now you just let it run. Right? Now you just let it run and go maybe your second target, third if you got one. If price were to head back down to entry, you would be out of the trade. That's okay. You wouldn't have lost anything, but now you have taken profit. So we are live every weekday, 8:30 AM EST, giving out free content. Come check us out on YouTube. Come talk to us. Go over to the website. That's www.algofactory.tech. Again, www.algofactory.tech. And for a limited time promotional offer, we are giving out memberships at $49.99 a month. There's a ton that we're offering over there. Come see what that's about. Also, you can see our Twitter link. All the links are up on YouTube. Come talk to us on social media. See us on the live YouTube videos. We hope to see you soon.